A direct question that can come in the exam is, out of the 4 options, I am giving you the options where there is the highest growth in the bank credit. Options are large industries, small and medium industries, service sector and housing sector. In economic survey, YOY growth in the bank credit to the different sector in April 24, this is housing at the top. And this is only the half of the story. The real masala, which can be another exam question, if you read it carefully, credit dispersal by scheduled commercial bank to industrial, micro, small and medium enterprises and service continue to grow in double digit despite the higher base. Similarly, personal loan to housing surged, corresponding to the increase in the housing demand. However, read this carefully. However, credit offtake by large industrial seems to be growing at a slower although stable pace. Why slow to large industries? Because large industries seems to be tapping the corporate bond market, and this is one favorite topic. Corporate bond market issuance in 24 went by 70%. See this graph here, chart 1.25. Outstanding corporate bond is increasing in quarter on quarter. If you see, it has been growing till December quarter. Only in March 24 it was slightly less, but overall the outstanding exposure is increasing and total exposure in the corporate bond market is, read this green graph, about 47 lakh crore here. When you see this 47-48 lakh crore, you must have some bell ringing in your mind. 48 lakh crore is also the budget of Government of India. And if you compare with the total deposit in the banking system, I think it will be closer to 180 lakh crore. So this 47-48 lakh crore in corporate bond is a huge amount. Corporate bond market are finally growing here, and most of the investment coming in is from the private placement side. This is useful. Please like the video, subscribe to the channel for 50% faster preparation only at ixamBee.